Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 4th of December. So it's an on-farm payrolls Friday, so we're probably going to see some stagnant markets today, but it could still give us some good scalping opportunities in some of the ranges that are formed. So we'll jump straight into the charts and check them out. So we'll start out here with the Aussie USD. This is the daily chart. Look, it's broken through this really key zone here that we highlighted a few weeks ago now, the 74 cent mark. We need to go to a smaller time frame to really isolate a potential trade here. Probably the 1 hour will be the choice. You can see that it's starting to weaken off a little bit. These last few hours in particular have been fairly soft, a lot of wick action, and the momentum looks like it's starting to subside a little bit. Now, if it wasn't on-farm payroll, I'd probably be looking at taking this one long until it actually does fail, but I'm probably looking for a weak point here. The 20 would be the point where if it was going to reverse, this is where it's going to. So what I'm thinking it might do is probably touch the 20 moving average, maybe fail to make a new high. That's probably what's going to likely play out if it is going to go short, and then sell off from there. So what we want to see is a touch of the 20 moving average on the 1 hour, a failure to make a new high, and then a break of the 20 moving average. Okay, so if we see that, we're going to get the lightning bolt effect, the lower high, low sequence that we're always looking for. Once we've got confirmation of that, the logical target's going to be the 74. This is all scalping today. Okay, we're not going to be looking for any big moves until non-farm payroll results come out. The market's highly unlikely to move any further than these small scalps. So we'll aim for those. We may get them during the day or even into London before the announcement. So let's have a look at those. We'll look for a lower high here and a break of the 20. Even if it does touch the 20 moving average, I wouldn't be keen on taking this one long, mainly because it's starting to look a little bit tired, and the MACD has come out of the histogram now on the 1 hour, as you can see. You can go to a 15-minute chart and maybe look for a smaller lower high, lower low sequence if you want to be really aggressive on the scalp. But and the target's still going to be the same. You can still see here the 74 mark is on this chart, very close to the 200 moving average on that, and the MACD is starting to fall. So you can take your pick, really. If you want to go for the 15-minute lower high, lower low, you may get that. You're going to see a break of this, but I would probably prefer to wait for the 1 hour on this one. So let it play out a little bit through the Asian session, and if we get a break below the 20 after that, I think it's probably going to make a pretty good short to this level. So not a bad scalp there. The next one we'll take a look at is the US dollar CAD. Now this one's been selling off. We can see that obviously it broke the 130 zone, which we highlighted was a very significant zone for it. Once it broke through there, it was always going to be pretty tough going for it to make a resurgence on the way up. But look, to really highlight how good this trade has been, you really need to go down to the smaller time frames. Like you can see here on the 4 hour, once it did break, it came back and retested it, and then down she came, touched the 20 a few times. That's always our preferred trade, making lower highs and lower lows on the 4 hour. So a pretty easy short once it did break through and retest it. On the 1 hour, it highlights it even more. You can see all the way down, it's been hugging the moving averages. Every one of those touches was an opportunity to short it. Now, what we're going to be looking for now, like I said, I can't really see this selling off aggressively before any results come out. So we're probably looking for a potential long into the moving averages now. So, look for maybe a little bit of a double bottom here on the 1 hour, or pretty much the opposite of the Aussie, a sequence of higher highs and higher lows. MACD is still pretty solid on the way down here, but that's only because we've had a pretty heavy sell-off in the last period down to that sort of 128.60 area, which is where it's hovering now. But this one, the preferred trade is long. Not really inclined to take it any shorter than this until we get some clarity and probably at least get a retest. I mean, at the moment, if we measured this swing, even with a Fibonacci, we can measure this swing out right now, and you can see that it's probably it has to come back to at least the 20 moving average, which is a 38.2 fib. That would be ideal. If you are going to short this one, a pullback to the 20 would be ideal on the 1 hour, and that does coincide, especially if it goes up there in the next few hours, with a 38.2 fib. And it's not a lot of pips away either. You're only talking about 25 to 30 pips away, really, so it could easily do that. And if it does that, I think I'd be looking for shorts in that area. There's no reason to think this is not going to continue down. We'll look at the dollar index in a second, but that's still looking fairly weak. And what we don't want to be doing, though, is just absolutely trying to short it without a pullback now, because it's highly unlikely to do that before a major news event, which is obviously non-farm payroll. So look for the pullback in this level, and then look for potential shorts from there. Look for a very small time frame change of trend around that area, or even a candle pattern that basically confirms that it's going to continue short. And then it's pretty easy going to at least this level, to the 128 sort of 55 area, and then onwards from that, it's got a fair bit to fall. So pretty good trading on the US dollar CAD. So we'll move on now to the dollar index. It's painting a very similar picture. You can see it's been pretty heavy selling from the 92 zone. Again, we take it down to the smaller time frames, and you can see that it's been basically doing the patterns that we're always looking for. So it retested it, only shallow, a shallow retest at the 92, but it did it, no question about that, and then it's been pushing off the 20 ever since. This is why the 20 moving average is so important, and this is why we have it on every single chart, because it's the go-to for joining a trend. You don't want to just jump in, but when you want to join a trend, when it does pull back to the 20 moving average, it gives you the entry every single time, so it's a fantastic trade. The 1 hour is no exception. You can see here, once it broke that 92, it tested it pretty much twice from below on the 1 hour, but ever since then, it's been selling off the 20. Look at every single one of those as a trading opportunity. You hear me talk about it every single week, so this shouldn't be news to you, but there it is. You've got about 5 entry points. We know it's short. We know it broke a key zone, so there's really no reason to be looking for longs on this. This is probably not an easy trade now before non-farms. It's probably going to meander on and do basically nothing. I can't really see it going very long, and I can't really see it going very short. So it's probably just one you want to leave alone, but certainly keep an eye on and then look for the continuation of this trend, or a potential resurgence if non-farms is not favorable early next week. But for now, I think this is probably one we'll leave alone for today. All right, we'll move on to the Euro USD. This one has busted out of the channel that we've been hoping for quite some time now. Whether it went long or short was irrelevant. As long as it busted the channel, the long was the one that really pushed up this candle here, broke the 120, closed above it, and really smashed all of these resistance levels. So, look, it's pushed up very, very high now. Like 121.50 really was pretty much or even a little bit higher than that, was the absolute high. But again, this one's probably not going to push much higher without a bit of a pullback now, especially today. So you want to be going down to the smaller time frames. Go down to a 4 hour probably is a little bit too long. 1 hour is not a bad one. You can see here. And this is another reason, again, I'm just going to go on about it again because it's so important. The 20 moving average, look how many times it touched it on the 1 hour. Like, you look at the daily and you say, well, how am I going to join that trend? You look at the daily and you say, well, I can't get involved. The last 3 days have been just really, really big bullish actions. Where do you jump in? Well, all you've got to do is go to the smaller time frames. The action is long, the momentum is high, and all the pullbacks to the 20 give you an entry long, and every one of them was a really, really good sign to actually enter this trade. So, really just make sure you keep a 20 on your chart just to check it out. Even if you're not using it to enter, it'll give you a really good guide as to where the momentum is swinging, and wait for those pullbacks. But you can see you've had some really good opportunities here. What we're going to be looking for now is probably a little bit of weakness. You can see the last few hours now have been a little bit weak, which you'd expect. If we get a bit of a change of trend now, we want to see a series of lower highs and lower lows, probably on a 1 hour would be great. The logical target's going to be that 120, sort of 20 area. Seems like a long way away, but it could certainly do it, and it would probably be a healthy pullback for it. If we draw a fib of that entire move, we don't really have to go the entire move, but if we draw a fib from where it actually retested this zone here, okay, again, the 38.2 to 50 would be around that sort of 120 area, which is also that resistance point right there. So a very logical point for it to pull back. And I don't think the 20 will catch up in time. It may. It depends on how fast it does it. But if the 20 does catch up and actually meets the pullback at that point, that makes it even stronger and makes it a fantastic re-entry point. So if you want to trade this, you probably need to go to the smaller time frames and look for the short into that level. A bit of a counter trend, I know, but it's a scalping day, and you're going to have to look for the scalps if you want to trade on a heavy news day when there's news expected. So look for the scalp, look for the short on this. It needs to make a series of lower highs and lower lows on the 1 hour. It needs to break these moving averages, and if it does that, you've got a pretty reasonable move. Like, it's 120 pips, so even if you capture 50 or 60 pips of that, pretty good move on the euro. That's what I'd be looking for there. Highly unlikely that it's going to go higher than this prior to the announcements. So, it's best to trade for the shorts if we get the signal. We need the lower high, lower low sequence. Look for the lightning bolt, and then off we go on that one. All right, we'll quickly jump on to gold. Gold is the one that has really been performing very, very strong this week. You can see this is a 4-hour chart. You can see we've got a 20 and a 50 about to cross. We know that that's very significant, hasn't crossed for quite some time, as you can see. Looks like it's about to cross now. We've got the series of higher highs and higher lows, looking very, very strong. Yeah, we want to probably see a bit of a pull. Like, we've got this pullback. If you missed that one there, probably wait for another one to come back and touch the moving averages again. It needs to break this zone. The logical target is the 1855. It's only a scalp again. This is one that you probably just want to keep an eye on, but I'd be... if you haven't already captured this, I know a lot of people have. I've got a lot of emails saying that they've got really good moves on gold and what I think. Like the 1855 is the logical target, the first initial target. But I wouldn't be jumping in right now because obviously the resistance is right here, and I'd be wanting probably a bit of a pullback back to around this level here. It can certainly do it. If it does that, the sequence is still in play. Momentum should still be long, and then that gives you a reasonable entry point. Then you're getting effectively $20 or $30 upside potential, and you've got a very strong support zone here and a very logical stop loss as well. So makes for a good trade, but it's got to do the action that we need first. So yeah, a good one. Certainly keep an eye on it, but you want to see that bit of a pullback to get a better entry point on that one. All right, the last one we'll have a look at is the S&P 500. Its last 3 days have been pretty flat. It seems to be struggling around this area now. It's pushed up a few times, struggling to get past the 36.70. It's had a fantastic run. It's been pushing really, really high now. It's separated away from the 20 moving average. I would be waiting for it now to come back. The most practical trade here is probably back to the 3600. Which is this resistance zone here. It's also the bit of a support zone that was around here. And by the time it gets there, the 20 moving average will be there as well. I'm still a little bit reluctant to take this much longer until we get clarity as to, what is happening with this particular indice. But I think the scalping opportunities are certainly there. There's probably 60 to 70 points down to the 20 moving average that you can get. But yeah, and especially when it's starting to look a little bit tired, and you can see it's flatlining even on the MACD, which means that the 12 and the 26 are starting to get pretty close to each other. So the trade will be down to the 20. I think that's the more logical trade. I think you got more chance of it coming down here than pushing up to 3,700. So that's the trade that I would be looking at taking. Go to the smaller time frames, wait for the series of lower highs and lower lows, and then aim for the 3,600. And that would be pretty much it for it. So looking for a scalp on this one to get us back to this zone. And then that would be the logical reload zone to potentially take it long and then maybe smash through that 3670 area and push on onwards and upwards to the 37 and 3800. So I hope everybody's had a great week's trading. We've had some really good breakouts and some really good opportunities. So hopefully you were able to catch some of those. Some key zones were broken. Keep an eye out for the scalp. Just be very mindful. Tonight's non-farm. So, keep your stop losses relatively conservative. Go for the scalps, and then we'll look for some good trends to continue on from key zones early next week. Have a great weekend, everyone, and I'll talk to you next week.